Hello, everyone, and welcome to December's Pensionmark webinar, where we'll be discussing budgeting. We appreciate all of you taking the time to join us today. A few items to go over before we get started. First, in order to ensure everyone has the ability to hear the information presented by our guest speaker, everyone will be on mute during the webinar. Second, please feel free to write in any questions you have using the Q&A tool on your webinar menu. And at the end, we will take some time to go through these. Now I'd like to introduce our guest speaker of Pensionmark, Deanna Bamford. Mrs. Bamford joined the Pensionmark team in 1992 after graduating from the University of California at Santa Barbara with a Bachelor of Arts degree in Communications. Mrs. Bamford is the Relationship Manager for Pensionmark's Northern California clientele and provides bilingual enrollment support to many of Pensionmark's clients. Mrs. Bamford has obtained the Certified Employee Benefit Specialist certification, and she is also fluent in Spanish. And with that, I'll turn it over to you, Deanna.
Thank you, Tori, and welcome, everybody. I appreciate you taking the time during this busy season to really concentrate on something that potentially could help your financial future. So again, thank you for your time, and I look forward to any questions that might come throughout this seminar this morning. So our topic today, as you can hopefully see on your screen, is the advantages of budgeting. And we're going to start right off with what is a budget and why do we need one? Today we're going to discuss some of the basic strategies that will get you on the road to a successful budgeting. And I do want to remind you that I am just giving some good general information, some little tips, I hope, and also point you in the direction of some tools that may assist you. But I'm not able to give you any legal advice or any tax advice. So if you really want to get to the nitty-gritties, and you may need to consult with an attorney or an accountant on those ends. But to start us off, let's talk about what a budget truly is. And it's basically a plan for you to ensure that you don't spend more than you make. I mean, bottom line, we want to make sure that your expenditures do not exceed your income. So budgeting is a plan, again, a way for you to determine your savings needs. And a big part of what we do at Pensionmark for you is to help you determine your retirement savings needs. But today's seminar, we're going to talk about both short-term and long-term goals and ways for you to plan for those. And budgeting is not just, divvying up your money and putting it into categories. It's more than that. It's a way to help you increase your financial predictability, to give you a better, clearer understanding of how much you earn, what's coming in, and understand where and what you're spending your money on. Hopefully, by doing this, we can improve your readiness for those inevitable expenses and surprises. I don't even know why we're surprised by them, because we know they're coming. We just don't know when and where. So, those expenses that the unpredictable, the water heater goes out, the car breaks down, you go to the dentist and find out your child is due for a couple of years of orthodontic work, some braces. Those are big costs, so establishing this budget is going to help us be better prepared. So next slide here, we're going to take a look at step one in budgeting. Your first step is going to be to figure out and evaluate your income. What is it that's coming in? And don't overlook other sources of income, aside from your weekly, biweekly, monthly paycheck. You might earn money from other periodic self-employment or perhaps a weekend job. You need to take into account any interest from bank accounts and dividends from investments. If you're receiving any type of monthly alimony or child support payment, that's got to be part of the equation. You need to be aware of all of these sources of income to create a solid and accurate budget. So a good place to start, if you're not sure, is to pull out a copy of your income tax filing from last year and look at all the various income sources listed there. So for some of us, that might be more complicated. Others, it may simply be your salary. So that's your first step. Next slide here. Oh, before we get to that, I forgot to mention that we like to incorporate some polling questions. We love your input and your involvement. So our first question, before we move on to creating this budget, is do you know the difference between a variable and a fixed expense? So yes or no, you should be able to respond, right on your computer here. Number one, if you do know the difference, and number two, if you don't. We'll give you a few minutes to respond, and then we'll look at the poll results and hopefully be able to answer these questions for you. Results are in. Ooh, we've got a good crowd here. So the results show that 86% of you do know the difference, and 14% are not aware of the difference between a variable and a fixed expense. So excellent. We're going to review that quickly here because that is important. That's part of the equation. So let's take a look at these different types of expenses. We need to quantify your expenses. And a good way to do that is to categorize them and put them into these two categories. So here we go. Here are some examples of a fixed expense. And basically, that's a relatively predictable month-to-month expense. For example, your taxes, your home payment, whether it's your rent or your home loan payments, that's a predictable expense. Insurance costs, your car loan, any car costs, those are predictable expenses. So those are all considered fixed, and they tend to be consistent from month to month. So those are usually the easiest ones to start budgeting for. But then the second type of expense is your variable expense. And these are the expenses that can change at any given time. So examples are going to be food. As you know, it can be fairly consistent in most months, but sometimes times like this, during the holidays, you might have a higher food expense as you're preparing for gatherings with family and friends. I certainly know that my costs are going up in that area. But there's also items like gas. And as we all are very aware, those fuel costs, oil costs have really fluctuated quite significantly. And fortunately, for the better for us right now, I know I'm paying almost half as much as I used to at the gas pump here each month. So that's actually helping my budget. It's reducing that one variable expense. But then you look at some of the other ones in entertainment or medical, those can vary. And so it's important to categorize between the two, know the difference, and separate them out so that you can, again, create a clear budget. And the next slide here, once you kind of determine those different types of expenses, we need to track. You need to track your spending. So to do this, it's recommended that you at least track your spending for 2 months, 2 consecutive months, to see where you're truly spending your money. Obviously, you don't have a whole lot of control of your income, of what's coming in, but you certainly have control over your spending. It's one area you can actually make a difference and make changes for the positive. And so we're hoping we can help you figure that out and determine what you're actually spending, and from there, hopefully find areas where you can potentially trim expenses without, too much difficulty. So a couple ways of doing that, tracking your spending, the good old-fashioned way, and I think one of the easiest ways, is to save those receipts. Keep an envelope, and every time you spend, save the receipt. And it helps to categorize it as well, into different, and we'll talk about that, into different, where you're spending it, different budgets. Take note of when you're spending cash. Sometimes that's difficult to keep track of. Just keep a log or a note of where you're spending it when you're using cash. And always, record all your checks and debit card transactions. So again, this can be as simple as paper to pencil, or we've got some tools that I'll share with you as well to do a better logging of all these expenses. So next slide here, we've got our next polling question. So as we're taking a look at your budget, here's our question. Which type of goals does your current budget reflect? Number 1, is it short-term? Number 2, intermediate? 3, long-term? Or 4, a combination of all the above? So currently, when you think of a budget, is it for short-term, intermediate, long, or combination? I'll give you a few minutes to answer here, and we'll take a look at our results. Okay, interesting. So nobody on our call this morning had indicated that their current budget reflects short-term, 0%. Intermediate, we've got about 22% of people that said it's my intermediate term goals. Long-term, we have 11%, and a combination of all. Here's where the majority of us fell. It's 67% indicated that their budget reflects a combination of all. And that's excellent. That's really what it should do. Interesting, I found that a lot of times I tend to focus on short-term goals when I budget. And so we're going to talk about these different goals and why it's important to categorize it. So thank you for your responses, and I'm glad to see that we're looking at the big picture here. So as you're thinking about your budget and where you can possibly cut back, that's where it becomes really important that you categorize and prioritize each item. You can kind of separate them into the unavoidable, those are your fixed expenses, and even some of the variable expenses are just unavoidable, as opposed to our luxuries. So these are items like, eating out, going to movies, wanting the latest and greatest technology. Those tend to be more luxuries. So you need to kind of separate those out, and then which are long-term and which are shorter-term goals. So ask yourself the question and decide where it's most important to allocate your money. So as you're doing this, I'm not trying to say that you need to cut out all luxuries. You work hard for your money. We all do. So it's important to, reward ourselves in ways, but not in lieu of taking care of, the bottom line, your budget, your expenses, your goals. So when you're doing that, just want to help you make better decisions. And the way to make better decisions is to have a better picture and idea of where your different expenses fall in these different categories. So now we're ready to do some math, our favorite subject here. So once you've taken your first couple steps here and you've determined what's coming in, that's your income, and you've kind of prioritized and categorized what's going out your expenses, you add those up, right, and determine, your income expenses minus your current expenses, and figure out whether you have a surplus or a deficit. Okay, so the thing is, you've got to make a conscientious management of your personal finances, and that requires a budget. Regardless of whether you end up with a deficit or a surplus, you need to have a better understanding of what's coming in and what's going out and where it's going out to. So if you find yourself in a position that you are bringing in more than you're spending, excellent. Then this is where you can start looking at allocating more money to your intermediate and long-term goals and your savings. And vice versa, if you're not bringing in enough, you're spending more than's coming in, then it's even more important that you really categorize your expenses so that we can see what can be cut, what you can cut from your budget, so that you can get closer and closer to your goals. So next, I think we might have another polling question. Let's see what we got here. Oh, first we're going to talk about, the different goals. Remember, we had the question, are you looking at your short-term, your intermediate, or your long-term goals? And most likely, most of us have several. Some are near future and some are further down the road. So to clarify your goals, you can put them in these categories. Short term, we would consider within 1 year. So you've got a goal, by the end of the year, maybe you've got a remodel you'd like to do on your home, a vacation that you're planning for. Those would be your short-term goals. Your intermediate are within the next 5 years. So those are going to be probably, higher cost goals. And this is where, when you get into your intermediate and long-term goals, where you need to take into consideration inflation and interest. So if you're saving for an intermediate goal, perhaps a child going to college or saving to purchase a home in the next 5 years, you need to take into consideration that those costs may increase for that same item or service over the next 5, or if it's a long-term goal, 10 years and beyond. So you need to take into account inflation. And then hopefully, if you're able to save, you're potentially earning some interest or something on your savings. So again, that needs to be factored in as well when setting these goals. And this is where, again, we have some good tools available for you. This is a little harder to do with pen and paper to determine, but fortunately, there's excellent calculators available online to you that I'll show you about to help you to determine the cost of these goals. And some tips, when you're planning ahead for your savings and your goals. For example, if you're currently making car payments and your loan ends, right? Maybe you do a 5-year loan and you completed paying off your car and you're still driving it and you no longer have a car payment. One suggestion is continue to save that same amount that you were making for your car payment in a savings account for the next couple of years as you're driving your vehicle that is not going to last forever and you're going to need a new one. So if you continue to save that regular car payment, potentially in 2 years of doing that, maybe you have saved enough to purchase a used car, off the top, or make a nice down payment on your next car. So by setting your goals and being realistic about those expenses that are coming up, you won't be as surprised and hopefully not find yourself, going into debt to cover expenses that should be part of your overall budget and goal. So next slide here. So once you've set your short-term, intermediate, and long-term goals, it's time to prioritize them. Okay, we could take a closer look at your income and how it compares to your goal, near-term and long-term. Which goals are going to require the most money? When are you going to need that money? Again, that's where the timing comes in. Are your goals equally important? And that's going to be probably no, and it's probably going to be different for each person. So you got to make sure when you're going to need it and prioritize it. What's the most important to you? If you've got that remodeling that you were hoping to do, where does that fall? Where does that rank? And this is something you're going to have to evaluate, often, because your perspective may change, especially as you complete this budgeting. And again, it's going to be different for each person. And so this is where we're going to determine, do you have champagne taste on a beer budget? It's a good example. Or you got to get in line, get your goals in sync with your income. So here we have some little steps that you can take to increase the amount you save each month. And some of these seem obvious, but they can make a big difference. Little steps today can make a big difference in the long term. Sometimes your spending habits are so ingrained that we don't even realize where, and how much we're spending. So here's a list of a few suggestions, ways to limit some common expenses and help keep you on track. So of course we know, brown bag it, take a lunch, just even if it's a few times a week, that can save significantly. Grocery shop with a list and don't go hungry. That's my recommendation to you. I tend to always overshop if you go hungry. Stick to the list, and coupons are always great when possible. Skipping drinks at restaurants and opting for water, which many times you have to actually request these days, but don't have to pay for still. That can make a difference long term. Carpooling. Some of the big ones that can make the big difference is paying down those credit cards and any loans, and especially your higher interest loans. That's one way you can truly save money. And credit card companies don't usually call you and offer lower interest rates for you, but you'd be surprised if you take a proactive approach and really list out any debt, credit card debt or otherwise that you have, and list out the current interest rate. Pick that highest one and call that company. You'd be amazed at just by asking, you might qualify for a lower interest rate. So that's another way to kind of trim costs without giving up anything. And then do not skimp. Please don't take it away from your personal savings. And by that I mean your emergency account savings and your retirement plan savings. Let that be the last place unless it's absolutely necessary to cut back there. Don't skimp out there. Pay yourself first. Keep that in your budget. So these are just some tips, and then obviously small steps you can take, but you're going to have to make adjustments as you go. So here we go, our polling question number 3. Are you currently using some type of financial tool to monitor your budget? Yes or no? Simple question. Do you have a tool or not? And we'll take a look at your answers, and hopefully for those of us that don't, I'm going to give you a few suggestions that may help you. Polling results, ooh, interesting. We got a 50-50 split here. So half of us, yes, have some kind of tool that we're using, and half of us say no, we've got no tool. So good. Hopefully here I can give you a couple suggestions, and we can find you a tool. So here we have, some of you may have seen this before. Here is a screenshot of a tool that's available just by being part of the Pensionmark family. This is our personal financial portal. We have done webinars on how to use this tool. This is available to you at no additional cost. It's something that you can request. At the end of the seminar here, we'll give you contact information on how to contact Pensionmark directly. So this tool, it's a site that incorporates your whole financial picture in one place, a non-transactional site where you can track your spending habits, access your daily budget, look at your savings accounts. It is an awesome way to really look at the big picture. And the budgeting tool, as I mentioned, is embedded right in here. And the nice thing about it is it helps you. You don't have to save those receipts, because what it does is it tracks your spending if you're using, because you're going to link your account. So if you're using your ATM or credit cards or even writing checks, it shows record of that and keeps track of it. And then you're able to go in and actually assign. It'll create a budget just based on the input that it's received from the different financial institutions, but you can also go and customize it, which is nice, and assign the spending to certain budget categories. And this will really help you establish that budget, and then it takes it a step further to help you reach your goals once you've set that, because there's a gap analysis tool involved that can show you what you currently have saved and how close you are if you're on track to reaching your long-term retirement goals or whatever other goals you've set. So again, if this is something taking advantage of, sometimes you just need a reminder to get back on and take a look at it, maybe on a monthly basis. And if you have not tried this tool yet and are interested, please do reach out to Pensionmark and let us get you set up and see if this tool can help you. In addition, we have our online education center at pensionmark.com, and right on the education center, we have some quick tools, tips, calculators, videos that you can use that can, again, help you in this whole budgeting process. The financial calculator tool is an excellent way to do some quick calculations. Remember, we talked about getting to that math section. And then the webinars, we have other educational videos and webinars that we've done previously. One included is that personal financial portal one, so you can go back and view those at your leisure as well. So please know that we have support and tools to help you for those 50% of you that said you're not currently using any tools. So your final polling question today is, what do you believe to be a reasonable expenditure for holiday gifts? As we're in the season, what do you think? And this is a tough one to answer unless you've done some budgeting, but would you say 1.5%, 3%, or 2% of annual income? What seems like a reasonable amount to spend on holiday gifts? Let's see what our attendees here today think. The vast majority, good for you, are in the category number 1, which is 1.5% of annual income. 89% of you indicated that that's a reasonable amount. The 3%, 11% of you, generous givers, would feel like 3% of your annual income is a reasonable amount to spend, and then 0% indicated number 3, that 2% was the right amount. So the reason we ask this is that's an important question, and something, the only way you would know that is if you create a budget, and not only create it, but review it ongoing. This is a kind of a lifetime exercise, and I know it's a tough time of year to even be thinking about this, but it's important. And really right now, and this is something that's easy to do, and I've always just gotten in the habit of doing, is keep those receipts. I just keep a little envelope for each holiday year, and I keep all my receipts, and then at the end of the season, add them up. And then it's very quick to see what percentage, you can see what you truly did spend. And in doing so, plan for the next year and make reasonable goals for your spending, and prepare throughout the year, and make that a category in your budget. You know, gift giving, if that's important to you, and you know it's going to happen. It shouldn't be a surprise. It comes every year, and get that into your budget. So now, once you've established this budget and your goals, you need to review it. And again, it's recommended monthly. If you're using one of those online tools, you could possibly do it even more often, but at least monthly, look at it. Compare your actual expenses versus your budget amounts. You know, writing it down is not enough. You've got to look and see, what did you actually do? Is it in line? And you can, once in a while, you've got to adjust some of those variable costs perhaps. And again, there's always room for improvement. So hopefully you've attempted to do some kind of budgeting in the past, and perhaps now is just a good reminder to get back in there and make some adjustments and possibly improve, so that you, again, the whole goal is to be able to reach your future financial goals, short-term and long-term. So the real work starts now. I turn it back to Tori here to give you some information again on how to contact us, and I wish everybody the happiest of holidays and the best of luck with this budgeting. Thank you so much again for your time this morning.
Thank you, Deanna. We appreciate you sharing your time and knowledge with everyone here today. We will now start addressing some of the questions that have been filtering in. Please remember that if you have any questions, you can submit them using the Q&A tool on the webinar menu. And as always, you can reach out to your dedicated service team at Pensionmark for any plan-specific questions. We'll go ahead and just give it a couple seconds here and see if anyone has any questions for Deanna. All right, well, it doesn't appear we have any questions at this time, so this will conclude our webinar today. Thank you again, Deanna, and thank you, attendees, for your participation. Hope everyone has a beautiful holiday, and we look forward to our next webinar series with you. Take care.